Good morning, everybody, and this is your Dow Jones day trade setups for today. So we had data come in and drove the markets quite hard. Didn't move as much as what the S&P and the DAX did, but nevertheless, it was a move to the downside. You can see we are picking up on some structure here as well, which we're buying off. You look to the left, there's a lot of structure here. Now, there is a double top here, same as what there is on the S&P, but we need to break through the swing low of last week, and that is 33,618 for that to validate. Have a look at the oscillators. They have crossed over, pointing down. That's just the top oscillator. I need to move down a little bit more before that validates that. But looking left, there's way too much support here for me to get too excited about this. So at the moment, we just need to treat this as a range until we drop below the low of this swing low last week. That's 33,618. We start drilling down through the time frame. Sorry, that was on the daily. Story stays the same. It's very much the same. It's on the 8 hour, no difference. Could be an exhaustion bar, inside bar here, but there's no real difference to this. We're in between moving averages, so there's nothing really that changes right now. When we drill down to the 3 hour, you can see big exhaustion bar with data, inside bar here, oscillators group to downside, with diversions, yes, with a little bit of diversion. So, as I said, could be bottom of range. We've got crossover of the slower moving averages, and then we are below the 155 EMA. So that could be an indication that we need to be looking for continuation, but I don't see that on the 3 hour. Where we would see it is on the hour. So here you go. There's the closest level. Nicest bit of structure. I'm just going to use this level here as well. Well, actually, that comes into play. So this would be the zone I'd be looking to short off, and we are below all the moving averages. So that is 34,038 and 34,015, and obviously 3,400 is going to be some kind of resistance as well. So just fine tune this on the 15 minutes, and while we're getting there, don't forget to hit that like button. And same patterns what we got on all the other indexes, in amongst moving averages, flat, ranging, waiting for non-farm payrolls to come out. So I'm kind of not quite in two minds. I'm more bearish than bullish, to be honest. And this would be the area to pay attention to today, sometime, preferably once the data's out. So that's around 34,038 or 3,400. And then if there is a spike higher up, at 34,152, I would also be looking for something up there for a rejection, pretty much to come back and test these levels again. And if these levels start breaking, i.e. this level here, which is 33,871, then you can expect a little bit more to get down to 33,618. And once we get through there, then I suspect this double top will play out, and these gaps to the downside will act as magnets. But we have to break through this and retest it before we even look at it. And then you need to pay attention to what's happening to the left. It's utter chaos. So any one of these tails that we see here could offer support or resistance. So yeah, volatile times. I think it's going to be a little bit more volatile going into earnings as well. So everybody's going to be trying to second guess the Feds and whether they are going to raise interest rates or whether they can't raise interest rates. Anyway, that's kind of it for me today. I hope it helps, and we'll catch up with you on Monday morning. Cheers for now.